Hello friends, in this video we are going to see hire purchase and installment purchase second question. It's here. Please subscribe for more videos. And hire purchase installment purchase system advanced accounting, it's come for second year first year students too. I've already mentioned about regarding the hire purchase and installment purchase system. Okay, hire purchase is owner of the assets is the owner is the real he doesn't possess but he possesses ownership. But installment purchase, the buyer is immediate possess ownership. Okay, see here, let's start the question. Second question. Okay, now so it's readable. It's some maximum large. It's okay. Let's see whether it is possible. So we have to make movements every time. So let decrease something. Okay. All right. Okay, so here it is a question, so it's properly fixed. So now we can read it. So on 1st January 2000, Messrs. XYZ company took from Autocar Limited a delivery of a motor van on hire purchase system. 2000 being paid 2000 being paid on delivery, and the balance in 5 installments, 3000 each, payable annually on 31st December. Okay, the vendor company charged 5% interest on yearly balance. The cash down value of the van is, the cash down value how much? 15,000. Okay, show the necessary ledger account in the books of XYZ company. So there is no depreciation. Okay, company provide 10% depreciation according to reducing installment method. Okay, so the original price is cash price 15,000, 2,000 immediately paid, 3,000 in 5 installment we have to pay. 5% is a interest and depreciation is 10% per annum. So first we have to calculate motor car account for the purpose of depreciation. Okay, so remember the thing, XYZ company is a purchasing company. So general ledgers in the books of XYZ company. Okay, remember 15,000 is the cash price, 2,000 down payment, and 3,000 5 installment each, and interest is 5% and depreciation is 10% per annum. Okay, so first let's start with working notes. Okay, working notes here. What is the cash price? 15,000 is the cash price. Okay, XYZ company, annually 3,000 installment, 2,000 down payment. Okay, in a 5 installments. So let's start. First write cash price 15,000. Okay, now down payment is 2,000. So after deducting down payment from cash price, we will get 13,000 balance. Okay, now calculate the interest on 13,000. into 5%. Okay, so 13,000 to 5% means how much we will get? 650. Yeah, okay, I'll show you in a calculator here. 13,000 into 5%, how much? 650 we are getting. So add this 650 to 13,000, so overall 13,650 we will get. Now pay first installment. Installment is 3,000. Okay, 3,000 is the installment amount. Let's write here 3,000. Okay, at the place of first installment. So 13,650. So we are deducting 3,000. Then the remaining balance will be 10,650. Okay, so then add second year installment. So let's make it some big. Okay, so now add second year interest. Let's calculate it. 10,650 into 5%. Okay, so now how much we are getting? Let's calculate. Let's see in calculator. 10,650 into 5%. Okay, so we have got 533. Okay, now add these 533 in with 10,650. Okay, so how much we are getting? 11,183. Okay, so we got the balance amount is 11,183 we have to pay. So pay second installment here, the 3,000. After deducting 3,000 from 11,183, how much we are getting? Let's see in a calculator. So we are getting 8,183. Now add third year interest. Third year interest is 8 on which amount we have to take? On 8,183 into 5%, the balance amount. Okay, so now how much we are getting? So let's see now calculator. Okay, here 409. Okay, so add interest with balance. So we are getting 8,592. So you can see here by adding in a calculator. Okay, so we got 8,592. The third installment, now let's pay the third installment. After paying this third installment, we are getting 5,592 is the balance. So 5,592 will be the balance. Now add interest. So third year interest we have added. So now we need to add fourth and fifth year interest. Okay, here it is the first year, then you can write here balance as a balance, like after installment down payment, this 13,000 is the balance amount. After adding interest, this is the balance amount. After deducting installment, it is also a balance amount. Okay, if you like, you can write balance. or else you can leave blank. Okay, so I'm writing here all balances. So add after interest there is a balance, after deduction of installment there is a balance. So now the balance is 5,592. So now add fourth year interest. Okay, fourth year interest. So plus interest. Now we have to calculate on 5,592 into 5%. So how much we are getting? Let's calculate. We are getting 280. We can calculate. I have already calculated this 280. So you can calculate. You can see here on calculator 5,592 into 5%. So we are getting 280. So after adding this 280 means adding this interest to balance, because balance we have to repay to the vendor plus interest also we have to repay. So after adding, how much we are getting here? 5,872 we are getting. Okay, now pay the fourth installment. Minus we have to write minus fourth installment. Fourth installment, that is 3,000 rupees. Okay, so after deducting this 3,000 from balance, we are getting 2,872 remaining balance. Okay, so I'm adding this one line to make it comfort understanding. So we can write here as a balance 2,872. Okay, so we have added. Fourth year is over. Now we have to write for fifth year. So but before that I am taking this arrow to show this is the fourth year. Okay, now let's go for fifth year, fifth and final year. First we have to add interest, then we have to pay final installment. We on how we can calculate interest 2,872 into 5%? No, because this is the last installment we have to pay, so we should not calculate like this 2,872 into 5%. So we have to do directly, means what is the final installment we have to pay? We have to pay final installment 3,000. So from these 3,000 we have to deduct 2,872 directly. Okay, because we are paying overall 3,000. So how much we are paying? 128 we are paying as a interest, final interest. Okay, so now calculate this, add 128 into with balance 2,872. So we will get the payable balance 3,000. Now pay the final fifth installment minus fifth installment. Okay, the fifth installment is 3,000. So we have completely paid here. So now the balance will be 0. So I'm dragging a line here to make sure to unmix the problem. So now its present value is 0. So we have paid everything to the vendor. This is how working note we have to prepare. So now I'm making a memorizable arrow. So this is for 5th year. Okay. Okay, this is how we can prepare working notes. So let's start with the motor car account. So this is how we have prepared. Let's go. Vendor account is there also. So motor car, I have already prepared as a motor car, but let's see what is giving in a question, whether it is a motor car or van. Okay, so here is a date particular I have prepared already. XYZ company took from Auto Car Limited a delivery of motor van. Okay, so you can write a car or van, it's your choice. Okay, so the date's also important. So first January 2002 vendor, how much? The cash price of 15,000 and the depreciation is 31st December 2000. Okay, the depreciation will be 10%. Okay, 10% means what we have the depreciation 15,000, and those 15,000 we have taken 5% as a, or 10% as a depreciation, means 1500. 10% as a depreciation, so it's 1500. Okay, so now write the remaining balance. 12,000, it's 12,250. Oh, so 15, sorry, it's 13,500, because 15,000 minus 1500, so 13,500. So tally the ledger balance which equal 15,000, 15,000. Now whatever the balance carried on amount 13,500, it is brought here as to balance brought down 13,500. First write the date, 1st January 2001. Okay, 1st January 2001. So now to balance brought down how much? 13,500. Right here 13,500 as a balance brought down amount. Okay, now by depreciation 13,500 into 10% is 1350, 1350. Okay, so now you can also write carried on amount 13,500 minus 1350, we are getting 12,150. Now tally the ledger balances, 13,500 and 13,500. Here we have forget to write the date, so let's write the 31st December date closing also. So before this we have tallied two ledgers, 13,500 and 13,500. Okay, so this 1st January 2002. Okay, what is the carry down amount? 12,150. It should be brought here, the 12,150 as a balance brought down. Okay, 12,150. Now we have forget to write the date, so I'm writing here 31st December 2001. Now I'm writing for 31st December 2002 by depreciation 12,150. into 10%. Here we are getting 1215, 1215. So now balance carried on. So 12,150 deduct 1,215 from 12,150. So we are getting 10,935. Okay, balance carried on. Now go for fourth year. 2000, 2001 second, 2002 third year, 2003 fourth year. Okay, so enter the tally the ledger balances 12,150 and 12,150. The ledger balance should be always equal. Now let's go for 31st December 1st January 2003. Okay, two balance brought down. So balance brought down were the last balance carried on amount how much? 10,935. Okay, 10,935. But here I'm removing this underline amount. Okay, now 10,935 to balance brought down. Now calculate by depreciation. Okay, 31st March or 31st December 2003 by depreciation, and depreciation should be calculated 10% on reducing balance method, means the remaining balance which we have to pay by depreciation. $10,935 into 10% means 1,094. You can take 93 or 94. 1,094. Now by balance carried on. What you have to do is 10,935 minus 1,094. Okay, so 1,094 should be deducted from 10,935. So the remaining balance is, let's see in a calculator. Okay, so how much amount we are getting? 9,840. So the fourth year is also closed. Okay, now the last fifth year. Okay, so here actually the performer is over here, so I'm making it, I'm working on it. So okay, so the question fourth year is totally over. What we have to do, we have to do the final final depreciation. Okay, the final fifth year depreciation. 1st January 2004 depreciation. Okay, so here we have got lines, ledger balance lines. So 10,935 and 10,935, write the both the side, 10,935. Now what is the carried on amount? 9,841. Right here, first January 2004 to balance carried down. Okay, this is the fourth, this is the last, fifth year. 1st January 2004. To balance brought down. Okay. By mistake I have written here by balance brought down, but actually it's to balance brought down, so I will correct it. To balance brought down how much? 9,841. Okay, so what we have to do is we have to calculate the final depreciation here. So before that we have to write the date 31st December 2004 by depreciation. Okay, I make it here. I am closing for the year. Okay, just wait a moment. Let's draw the proper. Okay, here 31st December 2004 by depreciation. Okay, depreciation, what is the amount remaining? 9,841. Okay, on that into 10%, 984 is the final year depreciation. Okay, a problem happened, but okay, it will be fixed as soon as possible. So 9,841 into 10%, so 984. Depreciation is 984, you can see here. By balance carried down. Now write by balance carried down. Okay, here the fifth and last installment we have paid. So this is by balance brought down. It's not brought down, it's carried down, C and D, but by mistake I have done. I will rectify. Okay, let's see the balance carried down amount. 9,841 minus 984. We are getting 8,857. 57 or 56 we can also say. Now close this, tally this ledger. So we have prepared for 5 years. Okay, so write the ledger balances. 9,841. Okay, so the 9,845, 841 is the ledger balance. Close the ledger balance. Tally both the side. 9,841. So you can write here for the next year amount available or not. 1st January 2005. To balance brought down. What is the balance? 8,857. Okay, so here I'm correcting this. To balance brought down. Okay, the balance amount is 8,857. Okay, this is the final balance. I'm making it underline. After paying depreciation 5 years, the vehicle value will be 8,857. Okay, this is how we will prepare the account, motor car account. Okay, this is how we can prepare motor car or motor van account. Okay, now let's go for vendor account also. Okay, we are preparing these accounts in the books of purchaser only. Okay, so let's do another work. Vendor account, we have to prepare. Interest account, we will see the interest we will prepare or not, but vendor account we have to prepare. Okay, this is, so let's write here fifth installment, fourth, first, second, third, fourth, fifth installment. Okay, so now vendor is a account. Vendor, who are the vendor expected from Auto Car Limited. Okay, so Auto Car Limited is a sales. Okay, Auto Car Limited is a vendor, means he sells the goods to our company XYZ and company. Okay, let's start the vendor account. Okay, so first start vendor account by here. By van, how much the value of the van is 15,000, and interest, first year interest is 5%. Okay, first let's do one thing. Let's prepare, we have prepared just now working notes. Now directly, what is the interest? 650 is the interest, and overall 15,650 is the tally balance, ledger balance. Now let's see, 1st January 1st 2001, now 31st December 2001. Okay, no problem. The space are not comfortable, but let's make it comfortable and drag to left. December 31st 2001. Okay, to bank means we have to pay van amount and interest. Now we have to pay only bank means you can do this. Okay, down payment, we have paid 2,000 as down payment, and first installment is a 3,000. To bank means first installment. Now to balance carried on. Okay, so to balance carried on, let's see, 15,650 minus 5,000, so overall 5,000 will left, so 10,650. 10,150 will the remaining balance, or 150 or 650, 650. So let's go for another second year. Let's go for second year. This is not 10th January, actually it is 1st January 2001. By mistake has happened, I'll correct it. Okay, wait a minute. By balance brought down. How much balance? 10,650. Okay, balance is 10,650. By interest also we have to take. Second year interest 650 is the first, second year is a 533. Here you can see, okay, right, 533. Okay, so we have got 533 is interest, so 11,183 is overall after adding the interest. The ledger tally is 11,183. Now close the date 31st December 2001 to bank. Okay, 11,183 is a ledger balance to bank, means second, this is second year, upper is the first year. So second year where 5% as, okay, second year is to bank second installment is 3,000 and balance carried on amount, let's see, 11,183 minus 3,000, how we will get 8,183. Okay, so tally this 11,183. Okay, now let's go for another year. We have to correct this one, I told you. Okay, 1st January 2001. Now 1st January 2002 by okay, the balance brought down. How much the amount last? 8,183. 8,183. Okay, 8,183 by balance brought down. By interest, how much? We have to calculate interest. So we have already calculated here interest 409. Okay, so 409. Now make it total. Okay, 8,592 was a amount ledger tally, but here 31st December 2005. Okay, to balance carried down, or to bank means we have to pay the third installment to balance carried down. How much we have, how much it has. So now let's see, 8,183 plus 409 means 8,594 minus 3,000 means 12,594. So 8,000 after deducting 3,000 it's 5,592. So 8,852. So last and final year. Okay, this is the first year, second year, third year, but not fourth, fifth. So let's go for fourth and fifth also. First and first 2003. Okay, 1st January 2003 by balance brought down. By balance brought down. How much is the balance? 5,592 is the balance. By interest, we have to calculate. Look, there is a last interest. How much? Okay, here by interest 280 is the final interest. Now the overall okay, take the overall at 5,872 here. Okay, there 5,872. Okay, now tally the ledger. 5,872. Before that, what we have to do? Okay, just wait. I'm making it. Okay, here you can write the closing 31st December 2012 2003. Okay, by bank the final installment is 96. To bank the okay, to bank how much we have to pay? 3,000 as installment. So the remaining account is okay. So to balance carried on how much? Look here, 5,000 change plus 280, 5,872 plus either 5,000. So here is a different. Okay, so balance carried on amount 2,872. Okay, so let's see the last 1st January 2004 to balance brought down 2,872. 2,872 is a balance brought down. Now we have to take the interest. So how much is the interest? The final interest is 128, the final interest. So let's go for with final interest 128. So the overall is 3,000. Okay, so the overall is 10. So now write the 31st December 2004. Okay, to bank 5th and final installment 3,000. Now there is no balance carried down. Okay, there is no balance carried down. Okay, let's see. There is no need for balance carried down. Let's tally the ledger balances. So here you can see to balance carried down. This is the last 2004. Okay, now let's go for interest account. See, date particular amount, date particular amount. This is the way you have to create. Okay, okay. Now first January 2000 to interest suspense account appear. All right, to interest. suspense accounts. What is the first year interest? 650 is the first year interest. 650 is the first interest. 31st December 2000 by P&L 650. Okay, the second year. So here there is no, we should not close in interest account. So no need to deduct anything, no need to calculate balance brought down, directly go with the flow. Okay. So first year, second year, third year, fourth year, fifth year. So debit side to suspense, to interest suspense account, and credit side by P&L account. Okay. So first January 2001. So 533. Okay. So here interest 409. I'm just keeping here for advance. 31st December 2012 or 2001 by P&L for 533. 533. Okay. 409 by P&L. Now 31st, okay, 31st January 2002 to 31st December 2002. This is for third year. Now let's see for fourth year. 1st January 2003. Okay. Interest suspense accounts. Okay, this is 1st January 2003, 280, 31st to interest suspense accounts, and 31st December 2003 by P&L 280 rupees. Now the last 1001, 1st January 2004 to interest suspense accounts 128, 31st December 2004 by P&L 128. Okay, this is the way we have to prepare interest account because of 5 years completed. Okay, so we have to calculate interest account, vendor account, motor car account, and working note. This is the way we have to prepare it. Okay, please subscribe for more videos. Go to my playlist where you can find the different types of chapters names.